Welcome to today's Explainer. You know, looking at the crypto market today, August 8th, 2026, it honestly feels like we've been dropped right into the middle of a high-stakes, action-packed anime. We've got these bullish macroeconomic forces suiting up like massive, vibrant mechas, and they're going head-to-head with some seriously shadowy global bears. It's a literal clash of titans out there. So let's break down exactly what's fueling this epic showdown, and more importantly, what it means for your portfolio. And man, despite some really flashy action in a few sectors today, the bears are definitely dominating the battlefield right now. A staggering 69% of coins have actually lost value over the last 24 hours. So the overarching sentiment? Yeah, it's pretty heavy out there for the majority of the market. But hey, don't count the bulls out just yet, because despite that widespread red, the total market cap is flexing a massive power level of $2.20 trillion. So even with nearly 70% of the market taking a hit, the sheer weight of capital in the system means the overall space is holding onto a slight 0.29% gain today. The market basically has its energy shields up, fiercely defending that $2 trillion territory. Section 1, Market at a Crossroads. Right now, the apex crypto is caught in this fierce sideways struggle. Bitcoin is currently trading right around $64,940, well, essentially $65K, but it just keeps attacking that $65,000 ceiling and getting repeatedly rejected. It's a critical resistance zone. And remember, we're still trading nearly 49% below that crazy 2025 all-time high of over $126,000. That 65K mark is basically an invisible force field the bulls just cannot seem to pierce today. Section 2, Macro Bulls versus Global Bears. So we've got two massive opposing forces driving all this volatility. On one side, glowing with that bullish mecha energy, we have U.S. labor data acting as a massive tailwind. But on the exact opposite side, casting this dark, bearish kaiju shadow, we have escalating geopolitical tensions. The market is literally caught directly in the crossfire here. Let's look at the bull case first. We got a surprisingly weak July jobs report yesterday, showing the U.S. economy actually lost 23,000 jobs. Now, you might be wondering, why on earth is bad economic news a bullish power-up for crypto? Well, it's because a cooling labor market severely dampens the expectations for any further Fed interest rate hikes. It basically gives a giant, bullish green light to risk assets like Bitcoin. But soaring in from the other side, we have those geopolitical bears. We're seeing reports of a Houthi attack on a Saudi oil tanker, plus reports of Iran striking targets near the Strait of Hormuz. Just neutrally observing these events, they instantly spike traditional safe havens and commodities. Oil prices are showing extreme volatility right now, and gold has surged all the way up to $4,342. That stirs up stagflation fears, which is inflation combined with stagnant growth, and that acts as a heavy counterattack against the crypto bulls. Section 3, Tech Giants Fuel AI Boom. Okay, shifting gears to a massive power-up happening in the tech sector. $17 billion. That is a colossal joint investment announced today by SpaceX and Tesla to build a brand new terafab AI chip factory. This isn't just a small headline. This is a totally seismic event that's sending absolute shockwaves directly into the crypto space. And that $17 billion catalyst is sparking an absolute frenzy. Capital is rotating out of standard assets and blasting right into explosive AI and decentralized infrastructure tokens. Just look at the AI rig complex, or ARC. It's up nearly 40%. Altcoins like Toot and Bico are seeing Toot is up a massive 60%, and Bico is right behind it at nearly 49%. And of course, SpaceX equities have rocketed up over 13% today. If you're wondering where the momentum traders are, they are fully riding this AI wave. Section 4, Clarity Act delays spark rotation. Now, on the flip side, we have a heavy legislative headwind. The Clarity Act was highly anticipated this month. This is the bill that could finally grant compliance amnesty to major altcoins like Solana and XRP, removing that whole unregistered securities dark cloud. House hearings were progressing great in July, and the Senate vote was expected right about now, early August. But that official vote has officially been pushed back to September 14th, 2026. So what does this all mean for the market? Well, a quote from IBIT Research really hit the nail on the head, predicting this delay would trigger short-term profit-taking in alts, with capital rotating back into BTC and ETH as safer havens. And that's exactly what we are witnessing. Capital is retreating from high beta altcoins, the ones really sensitive to market swings, and it's taking shelter under the heavily armored shields of Bitcoin and Ethereum until we get some actual regulatory clarity next month. Section 5. Testing the 65K resistance. Bringing it back to the frontline battle at $65,000, we have the bull's ultimate weapon, $1 billion. Despite the stagnant sideways price action, the underlying strength here is just incredible. Bitcoin spot ETFs have pulled in a massive $1 billion in weekly inflows. That is the strongest institutional purchasing power we've seen hitting the market since April. That makes 5 consecutive positive trading sessions for these ETFs. This sustained institutional buying is basically acting as heavy armor for Bitcoin. It's providing an incredibly strong base, completely supporting the price and keeping it in the fight, even as those geopolitical kaijus and legislative delays try their absolute hardest to drag the market down. So we are left with a massive question today. Will this billion-dollar institutional power-up provide enough firepower for the bulls to finally shatter that $65,000 ceiling once and for all? Or will the shadows of global tensions and delayed regulations let the bears trigger a much deeper market retreat? It's a high-stakes battle unfolding right before our eyes, and the next few days are going to be absolutely critical. Thanks for tuning in to today's Explainer. Keep your eyes on those charts, and I'll see you next time.